Pound sterling to US dollar price forecast, declines on disappointing data, tumbles to 1.2500. UK data reports today were roundly disappointing, weighing on the pound sterling, GBP. Retail sales fell a greater than expected 0.9% in the October month, while November PMI data were generally weaker than expected, Scotiabank's chief FX strategist Sean Osborne notes. GBP slides on weaker than expected retail sales and PMI reports. Manufacturing and service sector activity slowed sharply, in contrast to expectations of steady or slightly stronger growth signals. The composite PMI fell nearly 2 full points from October's 51.8 to 49.9, just into contraction territory. Markets continue to expect the BOE to hold policy in December, but expectations for a February cut have improved. Swaps are pricing in 22 bps of easing. GBP has stabilized just above 1.25 after this morning's sharp fall, but weak price action and building bearish momentum on the short, medium, and long-term oscillators suggest limited scope for corrective gains and more pressure for losses in the weeks ahead. Expect firm resistance on minor gains to the 1.26 area now. Loss of support in the upper 1.25s leaves little obvious support for the pound on the charts until the mid-1.22s. GBP/CAR price forecast, early warning signs the short-term trend may reverse. GBP/CAR has formed a temporary bottom after a steep sell-off. The pair has been steadily rising back up during the last 4-hour period, see chart below, and has now almost completely regained the lost ground from the previous red down candle. Assuming the current period closes at the same or a higher level as it is now, it will have formed a bullish reversal pattern called a 2-bar reversal, green rectangle on chart. Such a pattern suggests a possible reversal of the short-term trend. That said, it is still too early to be confident such a reversal will take place. It is merely a warning sign that the trend may be about to change. Accompanying the formation of the pattern is the Relative Strength Index, RSI, momentum indicator moving out of oversold levels, blue shaded circle. This is a buy signal and could be another warning sign the downtrend is reaching a conclusion. Pound sterling to US dollar price forecast, declines on disappointing data, tumbles to 1.2500. The pound sterling extends its losses against the greenback for the third straight day, is down 0.47% after UK flash PMIs and retail sales data disappointed investors. This and heightened geopolitical tensions due to Russia-Ukraine and Middle East conflicts bolstered the American currency. At the time of writing, the pound sterling to US dollar trades at 1.2529 after hitting a daily high of 1.2594. Pound sterling to US dollar price forecast, technical outlook. The pound sterling to US dollar is trending down, extending its bearish bias. Sellers are eyeing intermediate support at 1.2445, the May 9th swing low. If breached, the pair could refresh year-to-date YTD lows of 1.2299, which were hit on April 22. Indicators like the Relative Strength Index, RSI, turned oversold beneath the 30 level. Nevertheless, it has not reached extreme levels, usually seen in solid trends. In the case of a downtrend, the 20 level would suggest the pound sterling to US dollar is oversold. Conversely, if bulls move in and reclaim 1.2600, look for a test of November's 20 peaks at 1.2714 as the next resistance. If surpassed, the next stop would be the 200-day simple moving average, SMA, at 1.2818. The table below shows the percentage change of British pound, GBP, against listed major currencies today. British pound was the strongest against the Swiss franc. The heat map shows percentage changes of major currencies against each other. The base currency is picked from the left column, while the quote currency is picked from the top row. For example, if you pick the British pound from the left column and move along the horizontal line to the US dollar, the percentage change displayed in the box will represent GBP, base, /USD, quote.